Hi guys, so here Anwar here, co-founder of Sublime Trading, here with the daily update for the UK and US indices for Thursday the 7th of May. Alright guys, hope you're well, hope you had a lovely Wednesday. So a bearish day across the indices yesterday, starting with the UK index. The day actually ended as an indecision candle. So what that means is the market was lacking any sort of clear direction. However, at the start of play today, we are seeing this bullishness coming back in. So what this means is that you don't want to get caught up in individual candlesticks. It gives you a very inaccurate picture of what the market is actually doing. We want to be looking at how the candlesticks sit in relation to the overall direction of the market. So for now, as we've already discussed in previous recordings, there's no clear direction. We're still waiting for the market to make a decisive move either to the upside or the downside. Moving across to the US indices, again we had a bearish day, particularly on the Dow Jones and the S&P 500, with price actually filling in the gap from Tuesday. So we had gaps on Tuesday, and then Wednesday's price action filled in the gap, which can happen following gaps up and gaps down in the market. Price can tend to fill the gap. So what we're seeing in the month of May really is price stuck so far between an area of resistance and an area of support, and what we need to see is clearly a breakout either to the upside or the downside. As already mentioned, there is no clear direction of the market, so this isn't a time to be opening up long positions or short positions. It's really a time to be standing aside. Now, applying patience is one of the hardest skills for a good investor or a good trader to execute. But this is really a time where you want to be standing aside and letting the market dictate the direction before you actually start opening up positions. It's always about establishing the best environment so that you have the highest chance of making profit. Okay, so with that said, let's get into the chart, catch up with what happened yesterday and what we could potentially see through the rest of today into tomorrow. So guys, if you're new to these daily updates, then I recommend starting with the recording that's pinned to the top of our Facebook page, so you get a good understanding as to what I go through in these charts. Okay, so as always, this is our 3-screen setup. We have the monthly in the top left, weekly in the top right, and the daily chart down here across the bottom. Starting with the FTSE 100, and on the monthly time frame, price still finding support at this level here, which is the low of February 2016. We can see that April was a bullish month, and if we look at May, we can see that the bulls are now starting to come in and push price back up. We can see there's a wick to the bottom of this candlestick, but remember, very early in the month of May, this could look very different, but for now, we are seeing bullishness creeping in. On the weekly, price is below the 200 moving average and the 50 simple moving average. Price still going through this pullback. Here's the bullishness of this week, still below that 6,000 round number though, which is acting as resistance. Now, if we come down to the daily time frame, price is below the 200 moving average, but finding support at the 50 and the 20 simple moving average, but below that 6,000 round number. So this is the squeeze that I'm talking about. We've got resistance above price and support below price. At the moment, these support levels are slowly pushing back up, but we want to see that 6,000 round number cleared. We want to see the high of April cleared, and that will then suggest strength back to the 200 moving average. Moving across to the US indices, starting with the Dow Jones, we can see that the month of May is looking bearish so far, still trading above the low of 2019. If we move across to the weekly time frame, we can see that price is currently trading below the 200 simple moving average. We can see how it's acting as an area of resistance. There's a wick above this week's candlestick, but price is now currently trading below the 200 moving average, below the 50 simple moving average. So what we want to know is whether this is a pullback before a continuation or whether price is looking to weaken further. We need to see price dictate that. Coming down to the daily time frame, price is below the 200 moving average. It's just popped below the 20 simple moving average. So this is the bearishness of yesterday that I mentioned earlier, but above the 50 simple moving average. So we can see that price is currently just in an area of consolidation. We have support levels below price. We have resistance levels above price. We want to see a breakout out of this whole area of consolidation. And that's if support levels start getting broken, then we'll see weakness. If the high of April is cleared, then we're likely to see strength back to the 200 moving average. Moving across to the S&P 500, starting with the monthly. Bit of bearishness so far in May, trading inside the annual levels of last year. So similar setup to the Dow Jones. If we move across to the weekly, price is very much above the 200 moving average, but below the 50 simple moving average. And if we come down to the daily time frame, price is below the 200 moving average and that 3,000 round number, and finding support at the 20 simple moving average. A bearish day yesterday. Overall, though, still in this area of consolidation. So as mentioned on the Dow Jones, we're looking for a breakout, either for these resistance levels to the upside to be cleared for strength back to the all-time high, or support levels broken to start seeing weakness back to the low of March. For now, this is just a sideways market as price decides on a direction. Moving across to the Nasdaq. The Nasdaq has a slightly different structure in that it's trading above the high of last year. Now, this is a positive sign for strength back to the all-time high. If we move across to the weekly time frame, this is also trading above the 200 and the 50 simple moving averages. On the Dow Jones and the S&P, price is trading either below these levels or in between these levels, but the Nasdaq is actually above both the moving averages, and we see strong bullishness so far this week. Now, on the daily time frame, price is above all three moving averages. You can see how the 20 simple moving average is acting as support. A different day yesterday compared to the Dow Jones and the S&P. We can see that price actually gapped up. An indecision candle, so not much momentum to the size of the bar, but it gapped up, whereas the Dow Jones and the S&P 500 had bearish days that filled the gap. What we're seeing here is, again, a consolidation where we have resistance levels above price and support levels below price. We want to see a breakout. If we get a breakout to the upside and above that 9,000 round number, then we're likely to see strength back to the all-time high. So moving across to the S&P 500 mini, which gives us an indication of pre-market price action, starting with the monthly. Similar structure in that price is trading inside the annual levels of last year, and an element of bullishness coming into the month of May. On the weekly time frame, price above the 200 moving average but below the 50 simple moving average. So we can see how the 50 simple moving average and that 3,000 round number is acting as resistance. Bullish week so far. And if we come down to the daily time frame, we can see that the 20 simple moving average is acting as a support level. Price is slowly working its way up. It is inside this consolidation, this little mini area of consolidation inside another area of consolidation. Overall, really, this is just a sideways market. Again, we have resistance levels above price that we want to see cleared, particularly the 200 moving average and the 3,000 round number, to suggest strength back to the all-time high. Or if these moving averages are broken, then we're likely to see weakness to the downside. For now, this is very much a sideways market. We want price to break out, dictate a clear direction. This isn't where you want to be 100% bullish or 100% bearish. This is really where you want to be standing aside, applying patience, being a little bit neutral, and then once the market dictates a direction, then we can start executing positions in that direction. So if the market continues to the upside, we can look for bullish opportunities. If the market starts reversing and heading back to the downside, then we can start looking for shorting opportunities. For now, we really want to be standing aside. Okay, guys, that's me for today. Please like, comment, and share. Let's get this recording out to the masses. Let's get people understanding how to use these indices correctly to build a solid investment portfolio over the long term. And I will see you on tomorrow's recording.